I'm fascinated by the roaring kitty effect. I was fascinated by GameStop. That was one thing worthy of many documentaries and many books, and we've seen both. But the roaring kitty effect, the one that we just recently saw, which is him just waking up one morning and using his Twitter or his X account, disrupting. Yeah, that is a different subject matter. That's not a repetition. That is a message that the whole world should take really seriously.
It's Tuesday, June 25th, and this is Markets Daily, a show where we get into the minds of some of the most experienced investors, CEOs, analysts, researchers, academics, and anyone with a smart or hot take on the crypto markets. Before we get into today's discussion, which I am very excited about, let's take a look at what's happening in the news this morning. Bitcoin briefly touched $59,000 as Asia began trading today. It's currently above $61,000 as of recording time. Bitcoin has been experiencing significant sell pressure over the last few days due to the coming Mt. Gox bankruptcy redemptions and sales by miners. Now, this while polymarket bettors are giving a 14% chance of Bitcoin rebounding to $65,000 by the end of the week. Bettors on the platform are also giving a 71% chance that an Ether ETF will be trading by July 4th. And lastly, Ether staking protocol Lido continues to outperform the market, up 25% in the last week. Now, joining the show to make sense of what's going on in the crypto markets and beyond this morning is Wall Street Bets founder Jaime Rogozinski. Jaime, welcome to the show.
Hi, thanks a lot for having me.
It's such a pleasure to have you here for so many different reasons, but I just want to start out with this very broad question. What are you watching in the markets this morning?
Well, Bitcoin is kind of the index that leads the charge, right? And it tends to kind of push everything and follow along with it. But I'm watching all sorts of coins in the market, like I'm an active trader. I wouldn't quite say I'm an investor yet. I'm not a buy and holder. I do own a lot of crypto, but I look at all like the blue chips and then some of the ones that are like up and coming.
If you had to pick your top three this morning that are most interesting to you, what would you choose?
I'm going to go with, I don't even know what they're called, but I just look at the tickers because I'm like a technical trader.
It's okay. Tell us the tickers.
It's going to be WLD.
That's WorldCoin, I think.
Yeah, that sounds about right. Looking at optimistic about AR and optimistic about one called IO. All three of those seem to be performing quite well and quite volatile. Yesterday, I was having a lot of fun with AVAX with Uniswap.
Well, I know that you are deeply embedded in the crypto markets. You just named three tokens that you're watching. And I'm just curious to hear a little bit more about your foray into crypto, given your background. You're, of course, the founder of Wall Street Bets. You've been following stocks, meme stocks, and now crypto for a while now. Talk to me through that journey and maybe draw some parallels for me between what's happening in the crypto market and what you experienced on your journey with Wall Street Bets.
Oh, I love that question. And yeah, and it's such a good question. You know, I started in the institutional market with Wall Street, right? Wall Street Bets. I was just passionate about the stock market. I won't get too much into that particular history, but that's where my strengths were. And as I started Wall Street Bets, Bitcoin started right around the same time. And I was enthusiastic about the idea. You know, it shares, the concept shares a lot of the same ethos that Wall Street Bets does. But I watched it at a distance. I was actually mining it at first, and I lost that wallet, whatever. But I never made it a part of the Wall Street Bets conversation because, at least in the early stages, it wasn't mature enough. There wasn't enough liquidity. If today we complain about the difficulty for the average person to access it, back then it was even harder. And then I just kept an eye at a distance. I saw more coins popping up. Ethereum, it could do more things, smart contract. And then I'm watching the ICOs in 2018, and I'm like, all right, clearly the market still has some learning to do, and still not going to get too much into it. But that was a mistake. The mistake was making an uninformed. The first time I was correct. The second time it was an uninformed decision. I had no understanding of the complexities in the applications of crypto, especially as it relates to DeFi and all sorts of different, very creative, very sophisticated tools. Even as a trader,
I want to touch on
go ahead.
on crypto merging with Wall Street, with institutions. Of course, you just mentioned it, right? We saw that with the ETF approval in January. But when people think Wall Street bets, they think retail. And I'm curious to hear what your thoughts are. Is crypto merging with Wall Street good for the retail investor? Is it bad? Is it neither? What do you think?
Well, I'll tell you who it's good for. It's good for the boomers. Right? Because they're the ones that are shying away from it. They're the ones that are saying these things are just a figment of people's imagination. Or they might be looking at it in a similar way that I was, right? They haven't looked too much into it, and just that seal of approval, institutional approval and regulatory approval should maybe nudge them enough to do a double take. But yes, taking it back to retail, it's great because retail and Wall Street bets and the Wall Street bets mentality, it's all about finding opportunities of arbitrage, of inefficiencies, to make money with low risk because of changes that are taking place. There are, and there will continue to be plenty. We saw even prior to the Bitcoin merging that there's spillover from crypto back in the days when Terra Luna collapsed. The shockwaves, I'd argue we're still feeling some of them today. But the shockwaves immediately made it to the stock market, right? And this was even before FTX, which had even higher ties to institutional money. So, even without ETFs, you already have one market affecting the other. And we already see that, that the institutional money does affect the crypto market. When Jerome Powell speaks, you see what happens.
Now, we're talking about the crypto market. There are many different facets to the crypto market. There are, of course, Bitcoin, Ethereum that are maybe a little bit more mature than some of the, I guess, more fun tokens or fun cryptocurrencies are. And I bring that up because when people think about Wall Street bets, they think about Roaring Kitty, who just resurfaced online. And he's, of course, an influencer of sorts, a content creator. And I want to dig a little bit deeper into this influencer kind of content creator influence that's popped up over the years on the markets. How do you think this is going to play out?
I'm fascinated by the Roaring Kitty effect. I was fascinated by GameStop. That was one thing worthy of many documentaries and many books, and we've seen both. But the Roaring Kitty effect is him just waking up one morning and using his Twitter or his X account.
It's crazy.
And disrupting. Yeah, that is a different subject matter. That's not a repetition. That is a message that the whole world should take really seriously in context to your question, right? So the retail market continues to exist very strong and very hungry. Roaring Kitty's obscure tweets were sending, they were having to spend trading on all sorts of stocks in the actual stock market. And you saw anything in the crypto market that resembled the word cat or GameStop or EMC, like everything just skyrocketed. People are hungry for being influenced. So that's just something about the market. That's just something about the people that are sitting there watching and waiting and looking for somebody to tell them what to do. And they're clearly not getting it from Bloomberg or CNBC. They're clearly getting it from an X account or whatever it may be. As for the influencer side of things, the market continues to mature. We continue to see some of this ICO-esque opportunity grabbing, where you have a lot of meme coins, which is at least appropriately called, right? I think that when they call them a serious coin and it's not, then this is disingenuous. But meme coins are allowed to do whatever they want to because they're unapologetically labeled as such. And then they want to reach, they want to go out, and they want to get people. You have celebrities or influencers that'll go out there and promote the opportunity for a meme. These memes cause these coins to just pump. People make a lot of money. It's a lot of fun. People lose a lot of money. That's slightly less fun, but still fun. And it's attractive. It's attractive because, the types of coins that are more fun, that have influencers, tend to be a lot more volatile. And that is attractive to a small segment of people. That's saying, wow, had I bought this particular coin, look at how much money I would have made. and or they actually get into these wild rides.
Yeah, meme coins are super fun. We talk about them on this show all the time, but just given your background, what does this tell you about the state of the economy? My initial reaction is it can't be good.
Well, I don't know how much it tells us. I mean, it can't be bad either, because if the economy was bad, then people would be using it for like food instead of meme coins. Right? So there's disposable income out there, and it's being applied to entertainment. That's entertainment and gambling. It is gambling, but I also couple it with education, because even in the world of Wall Street, the act of being irresponsibly risky exposes people to then say, well, why did my stock go up? Why did my thing, and then they Google stuff, and then that's kind of a gateway drug in order to get people more involved.
Here in the US, we talk so much about regulation as one of the challenges facing the crypto market. From a trading perspective, do you think that retail really cares about what's going on with regulation? Do you think they're watching it as much as people like me in the news like to talk about it?
Some people do. The visionaries are watching the regulation. The rest of the people just wake up and say, oh, what happened? Oh, they passed a law. Oh, okay, that's why this is doing that. Okay. And then they'll follow through with it. But there's a segment, the thinkers are going to be following it. And I think that the word to describe that would have been the lack of regulation is what people are following, or at least the attempts to regulate in some. Most mature thought leaders in this subject matter are thirsty for a regulatory framework with which crypto can really blow off, right? That lack of regulation right now is preventing all sorts of growth and investment and innovation in the world of crypto.
Okay. And at the top of the show, I mentioned Bitcoin slightly down this morning, around $61,000. We have the potential for an ETH ETF to launch this summer. We're still waiting on when that might happen. What are you looking forward to over, I don't know, let's say the rest of the year?
When people ask me, where do you think Bitcoin's going? It's supply and demand, and supply is fixed, and the population / demand is growing. Demand amongst existing population is as well. So the direction of Bitcoin in the long term, not this morning, but in the long term, is very clear. So I'm extremely bullish on starting with Bitcoin, followed by some of the other large blue chip coins, which have those same properties that have that limited supply.
Okay, you're extremely bullish on the crypto markets, and you just said you're extremely bullish on Bitcoin. I ask everyone on this show this, and they don't always give me an answer, so if you don't have one, that's okay. But any price predictions? Where do you see the price of Bitcoin going?
And I was asked the price predictions last time we had a big run up, and I said 100 grand. It's such a nice number.
It's just a round number.
Yeah, I know, and it's points tend to like nice round numbers. So I'm going to say, because we're going to have a lot of sell orders at 100,000, 99,900.
Oh,
I added one extra one.
I was 900.
No, yeah. So $1 right below would be my selling point, because I can only assume there's a lot of people ready to sell at that particular price. So I will go with that one.
All right, that's a good prediction. I like that one. Now, before I go, I got to ask you about this tweet and this book that's come out. You tweeted about New York Times journalist Nathaniel Popper's book on Wall Street bets. And the reason I'm asking you about this is many people have told the Wall Street bets story through many different lenses. And in your tweet, you said that this is the best coverage on Wall Street bets and the phenomena that happened over the years. Talk to me a little bit about what's different about the coverage.
So I'm not being paid to plug. All right, this is the book. I have no financial interest whatsoever from this book, but I devoured the book in a matter of days. There's been countless documentaries, fictional movies, articles, whatever, books. Nathaniel Popper is probably the most talented journalist writer that I have met. He got in very deep in the weeds, his investigation was extremely accurate and profound. He was able to get his hands on information, which I dare to say I didn't have access to as being, an insider. And I love the book because it does a few things. Number one, it tells the story of Wall Street Bets with incredible accuracy and with the correct light. Wall Street Bets is painted as, it's the group that pumps stocks, and it's the group that made GameStop, the short squeeze group, which is not the case. And so it helps you understand the mentality, but that also helps you understand the demographic, the motivations, the ethos behind Wall Street Bets, and it does go through the GameStop episode, which, in my opinion, every attempt to explain GameStop by every serious documentarian or every serious storyteller would start looking into this topic. They would realize that it's incredibly complicated, that it was not just a short squeeze, that it was a very sophisticated maneuver and moving a lot of very well calibrated moving parts. And then they realize if they tell the story that way, people are going to switch the channel. So then they revert to lots of people bought the stock and then it went up, right? And that is such a miss. It's an injustice to the story. Nate was able to tell the accurate story in a very accessible manner because it is complex and it is technically complicated as well as socially complicated. He actually goes through without leaving a stone unturned in a way that a non-professional, that just a person without any knowledge of the market is able to understand. So I absolutely love the book. I recommend it so much.
Jaime, thanks so much for that, and thanks for sharing your insights on the crypto markets on the show today. It was a pleasure having you.
Thanks a lot for having me. It was a pleasure.